Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Merrick's Director of Index Research and Development with Nasdaq Investment Intelligence to discuss semiconductor fundamentals and sources of future growth. Mark, it's great to see you as always. Welcome back to Trade Talks. Let's take a look at how the semis have been performing relative to the other market benchmarks.
Yeah, thanks, Jill. Great to be back here. And I always love talking about this space. Of course, SOX is the PHLX Semiconductor Index that has been the industry benchmark for about 30 years, ever since it's launched. And then the other one we're going to talk about today is GSOX, which was something we launched recently, which, instead of tracking only 30 US listed semiconductor names, it tracks 80 names globally. So it gives you a kind of more globally diversified exposure. But when you look at the performance, right, in 2022, both of them really trailing each other pretty closely, down 36-37% for the full year. That was a little bit worse than what we saw with the Nasdaq 100, which was down 33%, and then quite a bit worse than the overall market, represented by the S&P there, down 19% and change. That has really reversed so far this year, with January almost complete through end of yesterday, through the market close. GSOX was up over 15%. SOX was up just over 13%. The Nasdaq 100 not far behind at 9%, and those all, outpacing the broader market. Encouraging signs from a macro perspective, in terms of inflation cooling off, which is helping investors get more comfortable with the peak in Fed interest rates, which is, overall being supportive of growth assets, but especially, some of these high growth areas of tech and semis are no exception to that.
And how about the fundamentals? How do margins look, and are they finally back in line with a more reasonable valuation?
Yeah, so I wanted to show people, two things that stuck out to me in kind of looking at what's been impacting the industry over the past few years versus the past couple of decades, right? And we'll get into the really exciting demand stuff in a second, but just in terms of fundamentals, if you look at operating margins, if you look at net margins, they are at or very close to historic highs for the industry, right? That's despite inflation being out of control for the past, let's call it, 12 to 18 months, that has been putting upward price pressures on every kind of manufacturer globally. The margins of semi companies have really, really held up nicely. And despite the fact that, we're seeing some weakness in certain areas like memory, that have historically been very cyclical and have made up, historically a bigger chunk of the industry, overall, I think the story, remains very encouraging in terms of how solid the margins have been, how long term this improvement in margins has been going on, versus sort of like the last big industry downturn in 08, 09. You look on the right in terms of valuations, the blue is PE, right? We're sitting well below the sort of trailing average if you go back to 2010, 2011, which is around 22. Right now, end of year, we're sitting at about 18 PE. And EBITDA, sort of right around, the long run average there at about 12. So, from an overall valuations perspective, this sector is not expensive. It got a little bit expensive in the middle of the pandemic, given the rush of demand for all the products that required semis. But take a look at what we saw, 15, 20 years ago when PEs peaked around 150, even around 200 for this sector. Really, really nothing similar to that going on in recent years. So fundamentals, valuations from a sort of pure ratio analysis perspective, pretty good for the moment.
Yeah, that what stuck out to me as well. Those crazy high PEs, 15, 20 years ago. But Mark, where do you see future demand coming from?
Yeah, so this is the really exciting stuff. And this is what I think is the challenge for investors right now to wrap their heads around is, as I mentioned, there is weakness in parts of this industry like memory. But interestingly enough, Samsung, the biggest player in memory, actually doesn't get most of their revenue as a company from semis. So they don't appear in either of these two indexes. So kind of interesting that the biggest player in the weakest sector, you don't even have that downside exposure to with these indexes. And then other areas that are weak right now, consumer electronics, PCs, smartphones, people loaded up on these devices during work from home, stay at home. There's this sort of reverse bullwhip effect in effect, right? Where, certain forms of demand that were elevated are now cooling off. That should normalize pretty soon. But in the meantime, right, the areas of real strength, places like automotive, industrial, servers, and data center, these are areas that are projected to grow, anywhere from 10 to 15% over the next decade. PCs, you'll see, are projected to grow at the slowest pace at only 3%. So, when you see a lot of headlines around, oh, PC sales are the weakest they've been in terms of year over year in quite a long time, that is not the area that is driving the growth of the sector anymore like it used to 10, 20 years ago when, the PC makers and the PC chip suppliers like Intel, those were the biggest players. Intel had one of its worst earnings releases in its history last week, and it didn't really impact the sector that much because, again, they are mostly exposed to PCs. That's an area of weakness. It's not where all this growth is coming from in the future.
Right. And then, Mark, I would imagine when you think about EVs and green technology, that's kind of where the juice is.
Yeah, yeah. I mean, you got to think about AI too, right? AI is kind of harder to quantify long term, but you've seen all the excitement the last couple months with Chat GPT and some of these other generative AI platforms that have come out and really illustrated that there is demand, there is a market for AI as a technology. We don't know exactly where it's going to be, but it could very well permeate, multiple industries, and the computational demand to train and run an AI platform like ChatGPT is just enormous. I mean, you're talking about trillions of data points already, or if not, already, then within the short term. So that's AI. Like I'm not even going to try to quantify that for you right now. What I want to point out on this slide is the energy transition and the transformation of the automotive industry. Right? You're talking about two things that impact pretty much every person that lives, certainly in the developed world, and most people worldwide, right? In terms of getting energy and transport. So you look at the growth in solar capacity and wind capacity growth through 2030, it's 23% compound annual growth per year. And when you look at, how much semiconductor expenditure is involved in generating a single megawatt of solar or wind energy, it is in the thousands of dollars. It's estimated at around 3,000 for wind per megawatt hour and about 4,000 for solar. Compare that with zero, right? Literally $0 in terms of generating power the old-fashioned way through burning fossil fuels. So that is a massive, massive tailwind as those forms of green energy really take off over the coming decade with all the different incentives that are out there, the fact that it's cost competitive now. And then on the right-hand side is the automotive forecast for EV penetration, right? Right now, you're talking about something like 4% of global auto sales are EV. There's the sort of base case growth that the International Energy Agency has come out with, saying that CAGR is going to grow about 23% through 2030. And then there's the kind of more optimistic where they think on top of all the government incentives, maybe we're going to grow as fast as 31%, such that by 2030, you're talking close to half of vehicles sold globally are EVs. An EV is easily $1,000 to $1,500 incremental semiconductor expenditure, given all the different ways that you have to manage and distribute and regulate and monitor the power that is generated from electronic battery versus an ICE engine, right? So you've got that major push from autos coming. You've got the overall push in terms of, advanced driver assistance systems, all the fancy infotainment systems, thousands of dollars per vehicle of semiconductor demand where you just didn't have it a few years ago. And that's, again, why I think investors should continue to be, excited about what's going on in this industry long term. Don't get too worked up about the sort of short term consumer demand hiccups. That stuff will all normalize before we know it. The long run picture looks really, really good for this space.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.